Let's bring Abigail Doolittle into this conversation, as we do every day at this time for our Options Insight segment. We're on a 4-day rally here right now on the S&P 500. Not sure what started it, but I guess the big question is, what will end it?
Yeah, good question for sure, Romaine. It's impressive indeed, about 5% over the last 4 days, really coming off of the recent lows. The question is it different from all the other counter-trend rebound rallies that we've seen this year, 5 or 6 of them? To answer that question, let's bring in Alan Nuckman of Bullseye Option, the chief market strategist over there. And I guess, Alan, the question is, because we have this pattern of going down, going up, going down, going up, but the overall trend is down on the year. Is this time different?
Well, I think overall that I see a lot of bullish positives here. To echo what Romaine says, look at where we are. We're down 8%, a modest 8% in the last 52 weeks. And right now we're 15% off the top when you look at the S&P, but we're also 85% off the COVID low. A lot of positives happened last week, after the first week after the summer break, whereas we saw a key reversal in the dollar, which is huge. We saw new highs at a lower close. So if the dollar stops going higher, that can be very much a positive for a lot of stocks and sectors. And then also we saw a fake breakdown in oil, and it bounced back inside that overall channel we've been in the last 6 months. And then we saw the S&P hold the 3,900 level, which is the halfway support of this bounce from the bottom.
Okay, so is that the driver, this weak dollar? It seems like it could be, but something else that I'd like to point out, Alan, that VIX, so we have stocks higher, the S&P 500 up 1%, but the VIX is higher too, and sometimes that suggests that some kind of volatility could be ahead. Talk to us about that possible contradiction and what it means.
Well, the VIX is still at a very low level. We're here at the 23, 24 level. We've got to break through 20 to get this next acceleration and have the S&P pop above that 4,300 recent high. The dollar is the key because that continued to rise, even though the futures markets are telling us that as we go further out, that the interest rates are going to top out at 4% here in 2022 and 2023. But then after that, they declined at 3.5% in 24 and down almost 3% in 25 and 26. So the dollar is going to lose its power because they're not going to be raising rates anymore.
Well, I happen to know that you like Pfizer, and one of the reasons you like it is sort of halfway in between that COVID low and the recent high. Talk to us about what you like and your trade.
Right. It's just a technical pattern here that's very attractive, trading between 45 and 55 sideways for all of 2022. It's 20% off its December top, but it's 75% off its COVID low. Also, the 45 level is the midpoint of the action for the last 5 years. So it's a great level to lean on. I'm looking at the January 45 call, trading for about 5. It's in the money. It's got a high delta. It's got a PE of 8, if that matters, that the fundamentals are telling us it's very, very cheap.
I love the fact that you talk about the idea that the PE valuation might not matter because these markets are driven by so many other factors. Alan Nuckman of Bullseye Option, thank you for joining us for Options Insight today. And from New York, this is Bloomberg.